Welcome back to Motivational Wealth. Ready for another deep dive? When we talk about building wealth, it might not be the first thing that comes to mind, but there's a really interesting connection to something so much bigger.
Oh, absolutely.
Think about the profound gift of salvation we have through Jesus. It's like a pathway to a different kind of wealth, that deep and lasting spiritual kind.
Right, that inner richness.
And in a way, understanding how to build financial wealth can unlock a different kind of freedom, a different potential in your life.
Yeah, like opening up new possibilities.
We're not saying they're the same thing, of course,
Of course not, but
but there's this shared idea of unlocking something better, something more, by understanding these hidden principles.
yeah, those keys to a better future.
Today, we're going to dig into some really thought-provoking insights from alacollects.com. They've got this video called 15 Secrets the Wealthy Don't Want You to Know About. And honestly, some of these points are real eye-openers.
Yeah, they definitely challenge conventional thinking.
So let's jump right in. Their first secret is, money loves speed, but the system wants you slow. What hits you first about that statement?
Well, the thing that immediately stands out is the contrast, right? You have this idea that wealth, money itself, has this inherent potential to grow fast, to be used quickly.
Yeah, it's almost like it's restless.
Exactly. But then you have the systems, the traditional financial structures, and they're often full of things that slow you down. Think about processing times for transactions or the steps you have to take to get a loan, all these delays.
It's like they're built for a different pace.
It makes you wonder, right? Is this intentional? And what does it mean for people who really understand how to build wealth?
It's fascinating. The video really highlights how wealthy individuals are often ready to move when opportunity strikes.
Yeah.
Like they've got capital ready for those market dips everyone else is afraid of.
Preparedness is key. It's not impulsiveness. It's about being strategically positioned.
It's about being agile. And that makes you think, right?
Abs-
Are you prepared to jump on those unexpected opportunities? Do you have that kind of financial agility?
It goes beyond just having cash sitting around. It's about your whole financial strategy. Can you make decisions fast? Can you move money efficiently when you need to?
Because timing can be everything.
Especially in the world of wealth building, seizing those fleeting moments. That's how some people really accelerate their growth.
And that brings us to secret number 2, which flips the script on something we all deal with: inflation. They're saying that if you truly get it, inflation can actually be a tool to build wealth.
Right, which seems counterintuitive at first.
Totally. Most of us, we feel inflation as our money shrinking, like everything costs more. So how can that possibly be an advantage?
The key is understanding the difference in how inflation affects different things. When you just hold on to cash, yeah, its buying power gets eroded. But think about assets, things like real estate or a business or even stocks.
They tend to go up in value.
Right. Their nominal value rises with inflation. And if you're carrying debt, like a mortgage with a fixed rate, what happens?
You're paying it back with dollars that are worth less.
Exactly. And meanwhile, your income is probably rising too, keeping pace with inflation. So some people are actually using this dynamic to their advantage. They're not just weathering inflation, they're actually potentially profiting from it.
It's a whole different way of looking at it.
It is, and it raises a crucial question for everyone. Are your assets positioned in a way that they're likely to outpace inflation?
It's something to really think about. And then they hit us with secret number 3. And this one really challenges the conventional wisdom about saving. They say, they never save money, they move it.
It's not about stuffing cash under the mattress or even in a savings account. It's about that constant flow, that redeployment of capital into things that will actually make it grow.
From static savings to dynamic cash flow, it's a totally different mindset.
It really is. Think about it. Traditional saving, it's all about that sense of security, of preserving what you have. But this principle, it's all about active engagement. It's about growth. It's like they're saying money sitting idle is actually losing value.
Losing out on opportunities.
Yeah. And the focus shifts to, how do I put this money to work? Starting a business, investing in the market, finding assets that generate income, that's where the real action is.
Okay, so speaking of investing, secret number 4 dives into the stock market. Now, a lot of people see the stock market as risky, but the video argues that it's not risky if you own the right things.
It's about shifting your perspective. Stop thinking about stocks like lottery tickets, just hoping for a quick win. Start thinking like an owner. Find those companies that are fundamentally sound, the ones with real long-term growth potential.
Invest in businesses, not just stock prices.
That's it. But the question is, what makes something the right thing to invest in?
Right. What are those signs?
Well, generally, you're looking for companies that are consistently profitable, they've got a strong competitive advantage, they're in a market that's growing, and they have good management. It's about looking beyond those day-to-day price swings and really understanding the business itself. Can it create value over time?
So it's about research. It's about knowing what you're buying into.
Exactly. It's valuing a company for its intrinsic worth, not just riding the hype wave.
The fifth secret they reveal is about access. They say they invest in assets that ordinary people can't access.
Right, and they give examples like high-end art, which has actually shown some pretty amazing returns.
Yeah, but that kind of stuff has always been out of reach for most people, hasn't it? I mean, who can just casually buy a masterpiece?
Historically, yes. Things like fine art, rare collectibles, even certain types of real estate, they required tons of capital and connections that most people just didn't have.
But it sounds like that's changing.
Things are shifting. We're seeing these platforms pop up that allow for fractional ownership. So now, with a smaller amount of money, you can get a piece of those alternative asset classes.
So the barriers are coming down.
To some extent, yes, but it's important to remember that these less traditional markets come with their own risks.
And they can be much harder to get in and out of quickly.
Exactly. Liquidity is a big consideration.
Okay, on to secret number 6. This one flips the idea of interest on its head. They say they make money while you pay it.
The example they use is mortgages. Homeowners are paying interest, right? And who's collecting it? The banks, the investors.
It's all about being on the other side of that equation.
It's about positioning yourself so you're the one receiving the interest payments. It could be through investing in debt instruments or becoming a lender yourself. There are peer-to-peer platforms for that now. Or even building a business that offers financing or credit.
Understanding how money flows and where the returns are generated.
And then finding ways to put yourself in that stream.
All right, secret number 7 broadens things out a bit. They argue that they bank on politicians, not lottery tickets.
Interesting, right?
It's saying that true wealth isn't built on luck. It's about understanding and maybe even influencing the rules of the game.
Things like laws, regulations, tax codes.
The idea is that networking, building relationships with people who make those decisions, it can have a huge impact.
Because ultimately, those policies set the stage for how wealth is created and preserved.
They determine the winners and losers in a way.
And understanding that bigger picture, that political and regulatory landscape, is crucial.
All right, ready for a perspective shift? Secret number 8 tackles the concept of scarcity. They say scarcity is an illusion.
Now, that one really makes you think.
They're saying that things like money, knowledge, opportunities, they're not actually limited. It's all about flow.
It's driven by innovation, by investment, by demand.
So instead of fighting over a fixed pie, you look for ways to make the pie bigger.
Cultivating that abundance mindset.
How do you even start to do that?
Well, I think it starts with realizing that creating value is the key to unlocking more opportunities. Instead of getting caught up in competition for a limited resource, you look for ways to solve problems, to meet unmet needs, to create something new.
And that can actually generate more wealth in the process.
It's a win-win. You're creating value for others, and in doing so, you're also creating wealth for yourself.
Secret number 9 is something we can all relate to. They say, your spending habits fund their lifestyle.
Every time we buy something, we're contributing to someone else's bottom line.
It's true. We're all part of this giant economic cycle.
And the wealthy, they understand that. They often position themselves to benefit from it. They're not just consumers, they're owners. They invest in the brands, the platforms, the things people are already spending money on.
So we could be doing the same thing.
Potentially, yes. Become more aware of where your money is going. See if there are opportunities to invest in the companies or industries you're already supporting with your spending.
Like buying stock in your favorite companies, or even starting a business that fills a need you see.
It's about shifting from passive consumer to active participant.
All right, secret number 10 brings it back to something really fundamental, our attention. They say they control their attention while you give it away.
In this world of constant distractions, focus is a superpower.
And they're saying that the wealthy are really deliberate about how they use their mental energy.
So how do we become better stewards of our own attention?
I mean, it's tough these days. There's always something vying for our attention.
It's about being intentional. Minimize distractions, be mindful of what information you're consuming, and prioritize the things that actually move you closer to your goals.
So maybe less Social media scrolling, more reading, more learning.
More strategic planning, more focused action.
All right, ready for a slightly more technical one.
Yeah.
Secret number 11 dives into how they use life insurance as a private banking system.
This one gets a little complex, but essentially, certain types of life insurance policies, specifically whole life insurance with high cash value, they can offer some interesting benefits.
Okay, break it down for us.
Well, these policies build up cash value over time, and it grows tax deferred, and you can actually borrow against that cash value.
Without getting hit with a huge tax bill.
Right. You pay interest on the loan, but the cash value keeps growing inside the policy. So it can be a way to access capital when you need it without the downsides of traditional loans or pulling money out of other investments.
It's like having your own private bank.
In a way, yes. But it's important to understand the specifics of these policies because the terms and costs can vary a lot.
Secret number 12 has a pretty provocative take on recessions. They say they see recessions as a planned transfer of wealth.
Which sounds kind of ominous,
Yeah, a little bit.
But the point is that when the economy takes a downturn, it can create opportunities for those who are prepared.
People with capital ready to deploy.
Exactly. They can buy assets at discounted prices from those who are forced to sell. It's not about celebrating hardship. It's about understanding how these cycles work.
So how do you position yourself to take advantage of those opportunities?
First and foremost, have a solid financial foundation. Some liquid savings, manageable debt. It's also about having a long-term view of your investments.
Don't panic when the market dips.
Right. Have the courage to buy when everyone else is selling, and that takes a lot of emotional resilience.
All right, secret number 13 talks about how they rarely pay for anything out of their own pockets.
Now, that might sound a little shady, but it's really about using financial strategies and business structures to their advantage.
So strategically structuring things to cover expenses.
It might involve things like leasing assets through a business to get those tax deductions, or using debt strategically to acquire assets that will appreciate over time.
It all boils down to minimizing personal tax liability and maximizing cash flow.
It's about understanding the rules of the game and playing it smart.
Secret number 14 highlights a really important distinction between income and ownership. They say they keep you focused on income instead of equity and ownership.
It's easy to get caught up in the idea that a high salary equals success.
But a paycheck is just one piece of the puzzle.
Real lasting wealth comes from owning things that grow in value, things that generate passive income.
So shifting the focus from earning more money to building equity. How do we do that?
It starts with making a conscious choice to allocate a portion of your income towards acquiring assets. That could be investing in stocks, real estate, or even starting a business.
Building ownership, little by little.
It's about creating a portfolio that works for you, even when you're not actively working.
And finally, secret number 15 pulls back the curtain on how consumerism works. They say they create industries around your desires, then sell your own lifestyle right back to you.
Think about it. Big companies, they tap into our deepest desires, our needs, our wants, and then they create products and services that promise to fulfill them.
And we buy into it.
We do. We buy into the image, the lifestyle, the promise of happiness. And the key takeaway here is that if you want to build real wealth, you have to become more than just a consumer.
Become a creator.
Yes. Identify those needs and desires in the market and find ways to create solutions. Develop a product, a service, even content that meets those needs.
Step into that creator role.
It's about actively shaping the world around you, not just passively consuming what's presented to you.
Wow, that's a lot to process.
It is, but it's incredibly powerful.
So what does it all mean for us, for those of us on this journey to build a better financial future?
Well, I think it starts with opening our eyes to these hidden dynamics, to the ways wealth is really created and maintained. And then it's about taking action.
Taking those steps, big or small, to build that future we want.
You know, it's amazing to think about how the dedication and the understanding required to build lasting financial wealth, it's kind of like the commitment and faith we need to cultivate a strong spiritual life.
It's a powerful parallel.
Both journeys require effort. Both require understanding those underlying principles. And both have the potential to bring so much richness and security into our lives.
That's a great point.
So keep exploring these principles and keep taking action. We're here with you every step of the way.
Absolutely.
And thank you for subscribing to Motivational Wealth. We're so glad to be on this journey with you. We'll be back soon with more motivational insights to help you unlock your full potential.
We'll see you next